In March 2026, Nepal Police filed criminal charges against 32 people for staging helicopter rescues on Mount Everest that never needed to happen. The indictment ran 748 pages. The total alleged fraud was nearly $20 million. International insurance companies had been paying for evacuations of trekkers who, in some documented cases, had been deliberately made ill by their own guides. The mountain everyone calls a wilderness has been running on a payment system. The system is not the one in the brochures. For a decade, the question of who pays for an Everest rescue has been quietly answered the same way every time. It is answered by an insurance adjuster on a phone line in London or Frankfurt or Singapore, while a climber sits at 5,800 meters with pulmonary edema setting in. The decision is not made by the pilot. It is not made by the doctor. It is not made by the climber. It is made by whichever party clears payment first. To understand why a rescue on the highest mountain on Earth is shaped by paperwork before it is shaped by weather, you have to start with what a helicopter actually costs and who, in the chain of authority above the death zone, is allowed to authorize it. A standard helicopter evacuation from Everest Base Camp at 5,364 meters to Kathmandu costs between $4,000 and $8,000. From Camp 2 at 6,400 meters, where the Airbus H125 is technically rated to land, the cost climbs higher. The same flight from Lobouche or Dingboche, lower on the trail, runs $3,000 to $5,000. Above 7,000 meters, the standard helicopter rescue does not exist. The H125, the workhorse of Nepali high-altitude aviation, is operating at the edge of its certified ceiling at Camp 2. Above that, only specialized long-line operations can extract a climber, and those operations require a pilot willing to fly at the very limit of what an airframe can survive in thin air. The 2013 long-line rescues by Maurizio Follini on Annapurna and on Everest established that such rescues are technically possible. They did not establish that they are reliably available. They are not. For climbers above 7,000 meters on Everest, the actual rescue infrastructure is human. It is Sherpas, oxygen, and a controlled descent to a helicopter-accessible altitude. That descent can take days. The pilot in Lukla is not the rescuer. The pilot is the final leg. Standard travel insurance does not cover any of this. A typical policy excludes anything above 4,000 to 6,000 meters, classifies high-altitude trekking as mountaineering, and treats mountaineering as an excluded activity unless purchased as a rider. The premium for a rider that covers 6,000 meters on a 21-day trek runs $150 to $300. The premium for a policy that covers technical climbing above 8,000 meters runs into the thousands. Global Rescue, the largest specialty provider in the sport, charges $495 per individual or $995 per family for its high-altitude evacuation package, which is required as an add-on for any rescue above 4,600 meters. Without it, a member who travels above that altitude is not covered. Global Rescue is not technically an insurance company. It is a membership organization. Its own published statement notes that traditional insurance usually won't rescue you at any altitude, and a medical evacuation can cost up to $300,000. That figure, $300,000, is the upper end of what an Everest rescue can cost when complications stack. Multiple flights, hospital stays in Kathmandu, international medical repatriation to a home country, long-term care for HACE or HAPE survivors. The number that the climber thought was $5,000 has, by the time the file closes, become a six-figure liability. The numbers explain what a rescue costs. They do not explain who decides whether the helicopter takes off. To understand that, you have to look at the phone call. The decision to launch a rescue on Everest is not made by the person who needs the rescue. The standard chain works like this. A climber falls ill at altitude. The guide assesses the severity. If the guide judges that descent on foot is not survivable, they contact their company's Kathmandu office by satellite phone or radio. The Kathmandu office then makes two simultaneous calls. The first is to the helicopter operator. The second is to the climber's insurance company. The insurance company is the gatekeeper. Most policies require their own emergency assistance team to authorize a rescue before it happens, not after. Not from the hospital, before. The authorization process in a non-emergency case can take 30 minutes to 2 hours. In a genuine emergency, it can be expedited to minutes, but it cannot be skipped. If the insurance company authorizes the rescue, the helicopter dispatches. The pilot picks up the climber. The bill goes to the insurance company directly. The climber signs paperwork in Kathmandu and goes home. If the insurance company does not authorize the rescue, or if the climber does not have insurance, the entire system inverts. The Himalayan Rescue Association will not dispatch a helicopter without payment confirmation. Helicopter companies will not facilitate the rescue without proof of coverage. In documented cases, climbers have negotiated wire transfers from family members in other countries, while the helicopter idled on the ground at Lukla, burning fuel at several $100s per hour. The most common failure mode is not malice, it is paperwork. A climber whose policy has a 5,000 meter altitude cap is not covered for a rescue from Gorak Shep at 5,164 meters, even though Gorak Shep is on the standard Everest Base Camp trekking route. A climber whose policy excludes mountaineering is not covered for any rescue above the line their insurer happens to draw, regardless of whether the climber considers themselves a mountaineer. A climber who fails to call their insurance emergency line before boarding the helicopter is not covered, even if the rescue was medically necessary, even if it saved their life. The phone call, in other words, is the rescue. The helicopter is just the vehicle that runs after the call clears. The system has a second failure mode that the brochures do not mention. It is the question of what happens when the rescue is not for a living climber, but for a dead one. In 2023, an Australian climber named Jason Kennison died on Everest at approximately 8,500 meters, on the descent from a successful summit. Multiple rescue attempts were made. None succeeded. What happened next is the part of the system that nobody had a procedure for. Under Nepal's mountaineering expedition rules, a death certificate cannot legally be issued until a government official has personally seen the body. No government official can reach 8,500 meters to view a body. The certificate was stalled. A reported insurance payout in the millions was held in suspension for months while Kennison remained on the mountain. His family, half a world away, could not legally close his estate, could not access his accounts, could not finalize anything that required a death certificate, because Nepali law required physical confirmation of a death that had occurred in a place no government official could legally reach. This is the system most climbers do not know they have signed up for. The rescue economy on Everest is built around the assumption that the climber comes back, alive or dead. When the climber does not come back, the financial machinery does not stop. It freezes. Insurance does not pay until paperwork clears. Paperwork does not clear until a death certificate issues. A death certificate does not issue until a body is seen. A body is not seen because no inspector can reach it. Kennison's body remains on the mountain. His family eventually received the insurance payout. The years between his death and that payout are not in any brochure. In March 2026, Nepal's Central Investigation Bureau formally accused 32 individuals of operating one of the largest insurance fraud schemes in the history of adventure tourism. The 748-page charge sheet alleges that between 2022 and 2025, 3 Nepali helicopter rescue companies, Mountain Rescue Service, Nepal Charter Service, and Everest Experience and Assistance, coordinated with trekking guides, hospital administrators, and at least 9 doctors to bill international insurance companies for rescues that were either unnecessary or completely fabricated. The numbers are not small. Mountain Rescue Service is alleged to have carried out 171 unnecessary rescues, billing approximately $10.31 million. Nepal Charter Service is alleged to have carried out 75 fake rescues out of 471 total flights, billing $8.2 million. Everest Experience and Assistance is alleged to have submitted 71 suspicious rescue claims out of 601 total flights, billing $11.04 million. In one documented case, 4 trekkers were extracted on a single helicopter flight on the same date using the same manifest. The companies billed it to insurance as 4 separate rescues, totaling $31,100, plus a separate hospital bill of $11,890. A standard private flight from Lukla to Kathmandu costs approximately $2,500. The mechanics of the alleged fraud are not exotic. They are kickbacks. A guide identifies a trekker with mild altitude symptoms. A headache at 4,000 meters is normal, but at the right angle, presented to a frightened tourist, it can be made to sound serious. The guide convinces the trekker that a helicopter evacuation is medically necessary. The helicopter arrives. The trekker is flown to Kathmandu, billed at $4,000 to $8,000, and admitted to a hospital that charges another $1,000 to $3,000. The insurance company pays. The guide receives a commission from the helicopter operator. The hospital receives an inflated reimbursement. The trekker, who was never in real danger, signs the paperwork because they are still scared. Nepal's Central Investigation Bureau has not found evidence to support the most sensational allegation in the case, that some guides poison clients with baking soda or unauthorized doses of acetazolamide to manufacture symptoms. That allegation, which dominated international headlines, was not substantiated by forensic evidence in the official charge sheet. What was substantiated was simpler and, in some ways, more damning. Hundreds of rescues that did not need to happen. Forged manifests. Forged signatures of doctors who later told investigators they had never signed the paperwork that claimed millions of dollars in their names. The fraud occurred almost entirely on lower trails: Everest Base Camp, Annapurna, Manaslu, Langtang. Of the 4,782 international tourists treated at implicated hospitals between 2022 and 2025, 317 cases were identified as fraudulent or exaggerated. The roughly 500 climbers who attempt the actual Everest summit each year were largely outside the scheme's reach. Summit expeditions operate under stricter medical protocols, oxygen support, and professional oversight. Staging emergencies above 7,000 meters is harder than staging them at 4,500. But the implications run in both directions. Insurance companies that absorbed $20 million in fraudulent claims do not absorb the loss quietly. They tighten verification. They delay authorization on legitimate rescues. They raise premiums on the next year's climbers. The cost of the scheme is paid by every honest climber who follows it. The 2026 indictment is about trekkers, not climbers. But the system that enabled it is the same system that governs rescue at 8,000 meters, where the consequences of a delayed authorization are not measured in inconvenience. The choke point on every high-altitude rescue is the same. The helicopter operator needs authorization. The authorization needs the insurance company. The insurance company needs documentation. Documentation needs time. Above 7,500 meters, time is not abstract. It is the variable that determines whether a haste patient walks off the mountain or stays on it. In May 2023, a Hungarian climber named Szilard Suhajda was reported missing near the Hillary Step at approximately 8,790 meters. His wife requested publicly that, if his remains were found, he be left on the mountain. It was where he had wanted to climb. It was where he had wanted to be buried. No rescue helicopter was dispatched because no rescue helicopter could be dispatched at that altitude. The decision was made by gravity and by altitude before any insurance adjuster had a chance to be involved. That is the situation the rescue economy quietly assumes will never happen. The economy is built for cases where the helicopter is the answer. Above 7,000 meters, the helicopter is increasingly not the answer. The Sherpas are the answer, and the Sherpas are not on the financial diagram that an insurance company uses to make payment decisions. When a climber high on Everest needs help, the actual people who provide that help are the Sherpas working the route, the climbing partners physically present, and occasionally the rope-fixing teams who have the skills and oxygen to assist a descent. None of those people are listed on the insurance certificate. None of them get paid, in most cases anything beyond their daily wage, for performing what amounts to emergency medical extraction at the limit of human physiology. The climbers who survive Everest above 8,000 meters do not survive because the rescue economy worked. They survive because somebody on the mountain made a choice the system never financially compensated. The honest answer to the question of what an Everest insurance policy actually buys is that it buys access to a phone number. The phone number connects to an emergency assistance team that, if reached in time with the right documentation in a covered scenario, will authorize a helicopter from Lukla to a landing zone the helicopter can physically reach. Below 6,400 meters, that system works most of the time. Between 6,400 and 7,000 meters, it works rarely. Above 7,000 meters, it does not work at all. And what the climber actually has is the goodwill of the people on the mountain with them. The brochure does not say that. The brochure says, comprehensive high-altitude evacuation coverage. The 2026 fraud indictment is, among other things, the first formal admission by a national government that the rescue economy has been operating outside the rules it claimed to follow. Nepal has announced reforms, stricter licensing for guides and agencies, real-time monitoring of rescues, mandatory reporting, transparent billing. Whether those reforms are implemented before the next peak season is, at the time this script was written, an open question. What is not an open question is the underlying architecture. The decision of whether to launch a helicopter on Everest is and will remain a financial decision made by people who are not on the mountain, about a climber who is. The mountain is indifferent to the paperwork. The paperwork is the only thing keeping the helicopter on the ground. If this investigation stayed with you, the next Summit X deep dive goes inside the helicopter war above 7,000 meters. The operators, the pilots, and the legal gray zone that decides who owns the air on the highest mountain on Earth. Subscribe and ring the bell. The forensic breakdown is already in progress.